Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. It is down 2% for the week, so nice little drop here on the S&P. Thought we were going to get a bounce here on Monday. Nope, just fell right through that 50-day moving average and seems to kind of keep working its way down. Nvidia's earnings came out and they were, I guess, less than stellar. And so the market kind of sold off from that. Also some interesting things. It looks like there's a little maybe turmoil isn't the right word, but not 100% agreement with all the members of the Fed. So they have, they're data dependent. I'm using their words here, data dependent. And when the government was shut down, they weren't getting all their data. So now they're coming out, and different Fed chairs and stuff are saying that different Fed presidents are saying some want to raise interest rates, some want to lower it, some want to keep it where it is. So the market is a little unsure here. And basically 69.4% think that the Fed is going to cut 25 basis points come their meeting December 10th, and 30.6% think that they're not, they're going to pause. So pretty interesting here. None of them think that they're going to raise rates. That's completely off the table. But it is interesting to see that, you know, a little government shutdown like that. And, you know, here's another thing on the government shutdown. They basically only extended this out to January. So why would they have the government shut down for so long, and then all of a sudden everything's cool and everything's dandy until January? You know why I think it is? I think it's because they would have had a mutiny on their hands if they had kept the government shut down through Thanksgiving and through Christmas. If people cannot go and fly because there was, you know, no traffic controllers and TSA, if they couldn't go fly and see their families over the holidays, I think that would have been bad news for them. So they kept it open just long enough to get through the holidays, and then we'll figure it out in January. Just my opinion. All right, the dollar, the DXY, is up 0.9% for the week. So remember, this is just the dollar compared to other fake fiat currencies, and this is its relative strength against them. Now, this finally happened. So we've been waiting for the dollar to break through this down-sloping 200-day moving average, and it finally did on Wednesday and closed the week above it. So the dollar's at 100.196, and we've closed above it. Now, this dark blue line here is the 200-day moving average. That is now going to act as support. So if, you know, this will act as support now, and it'll have to break through that to, you know, to break down to the downside. I don't think so. I think this will continue to kind of at least go sideways or maybe up a little bit, but it is interesting to see that it did break through there. And so this is going to put a little bit of pressure on our favorite commodities. Remember, if the dollar is a little bit stronger, it takes more of those dollars to buy the same ounce of gold or the same barrel of oil. All right, M2 money supply still going up, and I think we're getting closer and closer to something like this right here. So basically, this is the supply of money, or the closest we can measure it, and we had this nice little spike right here, which caused all the inflation that we're, well, not all the inflation, but a lot of the inflation that we're seeing now. And I think we're getting closer and closer to that. As the Fed is not cutting rates because the economy is having a good time, the Fed is cutting rates because the economy is having a bad time. And I think we're getting closer and closer to them doing that again. So when we get this, it's going to be money printer go burr. And that's when a lot of these commodities are going to shoot the moon. All right, the 10-year yield is down 2% for the week. So kind of trading in this range. I'm going to back out here, and you can see a little triangle pattern here. Just kind of trading in this range here. I don't really see any one way or the other for next week. It's around 4% this week. Probably more likely down next week than up. And the 30-year looks like more likely up than down. Closed the week at 4.72%. For a 30-year treasury. So if you think that 4.7% compounded every year will outperform inflation, then this is a good bet. All right, the VIX, the volatility index, shot up 18% since last week. This means that basically people are starting to get afraid, and risk is not paying quite as well as it was. This is something I want to share with you. And what we got here, one sec, and boom, wait for it. This is the market.
I'm not afraid.
This is the VIX.
You will be. You will be.
All right. Okay, let's go back here. We're getting serious again. All right, so the volatility index. So basically, this was Liberation Day right here, right? This giant spike up. Kind of waiting on a moment like that, because when these spikes up happen, that's when stuff gets really cheap and where we really, really make our money. All right, gold is down 0.4% for the week. So could be getting scooped up right here by the, let me hide the drawings here. Could be getting scooped up right here by the 50-day moving average. Almost kind of a bearish flag here. Let me go out to the 2-hour and you can see it a little bit better. See how it's just kind of coming down, kind of a bearish pattern. Looks to me like it's more likely to go down. I just think that we're going to get some more weakness out of this. Maybe not necessarily next week, but over the coming times. Doug says, hi, Steve. I like your channel and especially your enthusiasm. Thank you, Doug. You obviously love what you do. Yes, I do. We are heading into seasonal strength for gold. Just wondering if seasonality is something you consider, or you just let it present itself on the charts if it exists. Cheers. I looked this up, Doug. Actually, there is a way to pull this up on TradingView. I just can't figure out how to do it. If anyone knows how to pull up like seasonality on some of these things, please, in the comments below, let me know, and I'll do it for next week. But I tried to put together the last few years for gold on seasonality, and it looks like the end of November has generally gone down for like the last 6 years, and then in December it starts to go up. So that would kind of play into, I guess, what I'm seeing now. But this is, if we do have a little bit of sell-off, this is kind of the levels that I'm looking at right here, like this orange line, basically around 4,000 for a buy point, and then 38.75, 37.50, and then 35.75 would be levels that I would like here on gold. And the spot price of gold is still cheaper than the spot price of gold is still cheaper than the futures price, so that means it is in contango. Oh, thank you for bringing that up, Doug. Hopefully someone knows how to do the seasonality. I wasn't able to figure it out. All right, gold divided by the S&P 500 is up 1.6% for the week, so it looks like gold is probably going to win out again next week. So I would guess that gold will outperform the S&P 500 next week. And PHYS is down 0.5% for the week. So if you're new to the show, this is what we do. We do the red line, we do the yellow line, and we do the green line. And basically what that means is as if this gets cheaper and as the price goes down, you buy more. So I wrote 15%, 35%, 50% here. You can do whatever you want. You know, maybe you do 10% and then you do 30 and then you do 60%. And basically what this is let's say you wanted to buy $10,000 worth of this physical gold fund, right? Well, you'd buy $1,500 right here at 30 bucks, and then you would buy $3,500 here at $28, and then you buy your remaining $5,000 here down at $2,550. Now, I've gotten questions before, and last week as well, on, well, what if it never gets down to the green line? You know what? Most of the time it doesn't. Most of the time it doesn't. So you never get the stink bid in. I try to guess about how often do I think is it going to hit this green line, and I like my answer to be somewhere between 10 and 20%. In other words, most of the time it doesn't hit. So what happens is you may only get in on the red line and then it bounces and goes up. Well, as time goes on, I'm still going to cover PHYS and these other stocks. I move the lines, and every now and then we get a Liberation Day type sell-off where it just tanks and you get like, you know, one or two of these orders hit within a couple of days. Then you're in, right? So as this goes, let's say it hits, boom, all right, you got a 15% position. Then the stock runs up. Okay, I adjust the lines up. Maybe a couple weeks later, it goes boom, hits the thing again. Well, you know what? You add another 15%. And you may add several tranches like that that it takes several times to get in, but every now and then you catch some of these. And if you got your limit orders in, especially when you get these radical sell-offs, when they go down and these limit orders hit like that, you get in the black really quick when it reverses. The thing is you got to be sure that your thesis is still correct, right? So this is a bet on physical gold. And as long as the governments continue to print money, and as long as the fundamental case for gold is intact, then you want to see this go down because it gets cheaper and you'll get in the black real quick when everyone comes to their senses. All right. So if you're new, welcome to the show. Glad to have you. Thanks for being here. And GDX is down 3.3% for the week. So if you have no position in GDX, then I think now is okay, for maybe a 10% position. I suppose I could move the red line up there a little bit, although I think it will go down. Now, notice here too that that gold is staying above its 50-day moving average, and some of these miners like GDX, GDXJ, they're falling below the 50-day moving average. Usually, the miners are kind of a like a forecaster, almost like the RSI down here, of what the metal itself is going to do. So this is forecasting that it looks like the metal itself is going to move down. Okay, if you're fully invested, you got nothing to do but sit back, enjoy your beer, and watch the ride. Okay, GDXJ is down 3.6% for the week. So same thing for this. It looks to me like it's probably going to come back down. I like a limit order here at $87.50, then $71, and then $64 for your stink bid. And Rocky says, I just want to say thanks, Steve. Your technical analysis is top notch along with your limit order work. Since I have been watching your channel, it has helped me make over 30% this year. Before, I was just guessing. Now I'm making picks like a boss, and I just want to say thanks for all your hard work every week. Well, thanks for being here, Rocky. I appreciate that. I like making money, and I like helping other people make money, and if these lines are helping, then I'm glad they work. We also have something coming up. So, Rocky, if you are interested, check this out. We've got a sale going on that only happens once a year. So if you've been thinking about getting serious about your charts and process, this is your time. TradingView is running their Black Friday sale right now with discounts up to 80% off their plans. So with TradingView, you get clean, professional charts. You guys know, you see it every single weekend, right? Do all your alerts, ability to follow multiple stocks, futures, and all these commodities that we bring up all on one platform. So you can backtest ideas, save your chart layouts, right? Now, you can use this program for free, and there's a link down below for that. You don't get all the cool indicators, though, that you see here on the show, and it will never be as cheap as this until this time next year. So this is literally what I do. The sale ends here in about 5 days. So you got from the time you watch this video and a few days after that, and that's it. By this time next week, it'll be done. And after that, the price is going to go up a lot. This is the one I get. I get the premium version right here, the kind of number 3, and I'll just extend it for another year, and then I'm in. I don't think anyone here needs the ultimate. I don't need it. I think most people can land in this version right here, the plus version. Now, during this time of the year, this is kind of an anomaly in that the premium one is only $1 more for the whole year. So I just get this one, but I ran the show for 2 years on this plus platform, and it pretty much did everything you see now. It's just that this one is $1 more, so why not? Okay, so if you guys want it, the link is down below. Thank you guys for using that link. It helps support the show at no extra cost to you. So thank you very much for using the affiliate link. All right, and Girl Afraid says, pretty interesting, the chart GDX divided by XLE. That's this chart right here. Oil is like $2,000 gold at the moment and hated. And while I don't normally trade in first, you will see one up one day, the other is down. Okay, so interesting chart here. So basically what we're doing is we're taking gold miners and we're dividing them by oil stocks, okay? And so as the chart goes down, oil does better. And as the chart goes up, gold does better, or gold miners, I should say. Okay, so if we zoom out here, we can go way out here for the life of these two funds, and you can see that these are times right here where gold miners are doing amazing versus oil, and this is the time here where oil stocks are doing great compared to gold stocks, and that makes sense up here, right? Okay, we've got the cerveza sickness, run up, and then after that, that was basically when oil went negative, right? So all the oil stocks were in the toilet, and then they just killed it. Kind of looking like, okay, if I zoom in here on the daily, all right, so interesting one here. Thanks for bringing this up. Looks like we got a little bit of a bear pattern, bear flag. So this one, remember, just a ratio chart, but it's hanging right around that 50-day moving average, but it's definitely a bear flag there. And so I could see oil stocks here, at least in the short term, outperforming gold stocks quite a bit. That could bring it down quite a bit. So we might need to add to our oil stock positions. And silver is down 1.5% for the week. So had a nice new all-time high last week, came right back down, and then here on Friday, it just touched that 50-day moving average and then shot right up. So looking to me like silver's probably going to go up Monday or Tuesday of next week. I mean, that is a pretty convincing bar right there. And if you want silver, this is basically the program here. We're just running a Fibonacci retracement. It's not too complicated. I would get your first position, and all I'm saying is buy 10% here, 20, 30, 40, and then I wrote 50 again in case it gets down stupid cheap, like down to like, in the low 30s. But basically, I like 47.40, 45.40, 43.40, and 40.60 as kind of your limit order buys, if you want to get some physical bullion, or maybe you want to get into a fund like PSLV or some of these silver miners. Generally speaking, I think those are pretty good buy points, and I think in the future they'll pay off pretty well. All right, and we are in a tiny bit of backwardation here. The spot price is more expensive than the futures price, and we can see that here on this chart. Anytime you're below this white line right here, we are in backwardation. Above it is contango, so we're currently in backwardation, which may forecast a slight decline in the silver price next week. Gold divided by silver. Gold outperformed silver by 1.2% last week. We're sitting at 81.7 ounces of silver for 1 ounce of gold. That's kind of a tough one to read. Kind of looking like, I'll say gold is going to outperform silver next week as well. All right, and PSLV, so this is just like PHYS, but this is physical silver on the stock market. This one is down 1.1% for the week. So I think you start here if you want a silver bet, start with this fund and then move into the silver miners. We've got a rising 50-day moving average here, so it's still holding right there on the physical front. I like a limit order at 16 bucks, 14.25, and then 12.75 for a stink bid. And you'll see here the same thing with silver miners. So the silver itself is above the 50-day moving average. The silver miners are now below the 50-day moving average, so I think it's more likely that they move down, and probably the metal itself as well. I like limit orders on this one at 62.50, 55, and 47.50. And then this one is down 4.8% for the week. If you have no position, now is okay, I think, to start. And SILJ down 5.7% for the week. Again, I think now is okay. We've hit our first red line here on Friday. So we'll see if we come in here for like a little double bottom. That would be around, well, I'll give you the exact number, $20.46. I like this one as a leverage bet to silver. I mean, like if we go back here, like just buy it down here and sell it up here, right? Green arrows are buys, red arrows are sells. And I think now we can start accumulating again, making our first limit order here. And if and when it gets cheaper, then we'll add to it and we'll run the game all over again. All right, copper, paging Dr. Copper is down 1% for the week. So we have a quasi like triple bottom right here. So see how we got this bounce right here, October 10th, and then we got another bounce here, November 5th, and then we got another bounce here this Friday on the 21st. So more likely than not that this will bounce and go up Monday or Tuesday of next week. Basically, I think anything below $5 a pound copper is kind of your zone where you should be looking at. All right, and COPX is down 4.5% for the week, so got a little bit cheaper. If I'm right and the DXY moves up, we're probably going to see more sell-offs in most of these next week. Fell below the 50-day moving average. Common theme here, right? So probably going lower. Your first limit order hit at 58.50. Next one will be 53 and then 48.50. COPJ down 2.6% for the week. Probably going to be higher on Monday. This one's just above, excuse me, just above the 50-day moving average. It looks, I hope it hit. Okay, so we had the first limit order at 33.25. And yep, it hit. So it got down to 33.12. Now, not a whole lot of volume on this thing. Let me go out to the 30-minute here just to emphasize how small this fund is. Okay, so in the wee hours of the end of the trading day on Friday, look at this. The last 30 minutes, we had 6 shares trade. And then we had 4 shares trade from noon to 12:30. And then we had 4 shares trade, right? So very, very low volume on a lot of these. Check your volume, your average daily volume, and make sure you're not doing limit orders, okay? You could get smoked if the next guy selling isn't until way up here. You might think that you're buying it at 34 bucks, but you end up buying it at 36 because you didn't check the what the volume is. My kindergarten method is if they're doing 600,000 shares or more a day, you're probably fine doing a market order unless you're buying 50 or 100,000 shares or something like that. Okay. All right. And uranium is down 2% for the week. So I thought we would, so far this trend line since, before Liberation Day, basically since March, has just been obeyed. And this week it was finally violated. So we can delete that now. We'll keep it as a trend line kind of in our mind. So when it gets back up to that point, I'll put it in there again because that'll act as resistance. I don't know how much we can go by the spot price here just because it's very, very low volume and the reporting conditions are pretty sparse. But yeah, interesting to see that we did not get a bounce there. I was not expecting that. All right, SRUUF, this is probably a better chart for following the spot price of uranium, down 2.7% for the week. So no pounds purchased this week, still sitting at 74 million pounds. It's at about a 6% discount. So I sent out an alert to premium members on this one and some other these uranium stocks. Basically, it looks like we can start the purchases again. So again, just love these funds a lot, right? Just buy down here when no one cares, sell up here when everyone cares. Start buying again when no one cares, sell when everyone cares. Buy down here when no one cares, and I think we're entering the buy down here when no one cares again, okay? Right? Very, very bullish fundamentals for uranium. And I think this is a pretty good technical entry right here. It came down to the 200-day moving average, shot up, and you got a, what do they call this in technical? I think it's called a shooting star. Anyways, looking great. Just nice reversal bar right there, looking fantastic. And it hit right through our red limit order line, 1725. Almost got to the yellow line of 1625, but looking good to go up on Monday. Same here with URNM, down 6% for the week. So sent out a premium alert right here. Boom, $50 right there, right? So went through the first red line and it got right down here. And this is the same game, okay? It's all it is, I mean, look at these moves that you have in this thing, right? 165%. And then from there to there, 105. And then the last one, this is when I found out about it. It was back here, about uranium, I mean, 103%, sell. Right? Start accumulating, 145% sell. Okay, now I think we can start the accumulation game again, right? I think we can start accumulating as it goes down, okay, assuming it does continue to go down, but I think this is a great first entry point if you haven't had into it yet, and I think Friday was the day to do it. URNJ, same kind of thing here, down 8.3% for the week. I think you can start your entry points into this one. And again, 125%, boom, 203%, boom, right? This has violent moves, which is exactly why we're in it, because we want to make moves on these violent ones. So if you want setups like this, be sure to join our free and our premium service. If you're in the premium service, you get a whole nother video just like this every Sunday at 10 a.m. Pacific time. I show you exactly what stocks I'm in. You get the downloadable portfolio with colored pie charts and exact share counts and dollar amounts. You get real-time trade alerts. Before I buy or sell any stock, I tell you first. So you get occasional bonus videos from our guests, and we're going to start doing live Q&A soon. So I can't wait for that. If this interests you, go to the website, and all you do is I'll show you right here, go to the website, and you see this tab right up here. Just go to newsletter and then type in your email right here, hit subscribe, and you'll be signed up on our Substack. And you know that's where you do it because I'm pointing at it right there, right? But I love doing the newsletter. We're up to about 2,000 subscribers total. Not all of those premium, but if you're in the premium crowd, you get to see all the buys and everything, portfolio, and you get a lot of extra stuff. So thank you to all that are in the that have subscribed. I'm honored that I get to do this. This is a lot of fun to me. I love it. And yeah, I look forward to this every single weekend. All right, where are we? Barbara says the In It to Win It premium is a great value. So there you go. Thank you, Barbara. I appreciate all your support. You've been here for a long time. All right, and crude oil is, let's see, WTI is down 3.4% for the week, and Brent is up 0.2% for the week. So both of them, I'm going to go back to WTI here, both of them have kind of just been in a sustained downtrend for a while. So if we look at WTI, so this is going back to when we sold most of our oil positions, and then we've been accumulating here for the last few years as it's gotten cheaper. They're both kind of in a downtrend. Almost looks like the Palladium chart. We're kind of waiting for this to, I can just draw some quick rudimentary trend lines here, right? We're just waiting for this to get broken. Same thing with Brent here, right? It's kind of in a downward channel right here. So don't get too lost into the weeds. Just understand that oil is inherently cheap. It's probably getting cheaper. And so you need to be positioning in oil stocks now, just like we were positioning in gold stocks years ago, right? When it was down here and hated. Okay, look at this chart right here. Doesn't this look kind of like the WTI chart, right? No one cares. It's all hated. Now we're selling up here because everyone cares, right? Okay, so treat oil the same way. See, we're kind of in this no one cares, right? Same here for XLE. No one seems to care. It's just going sideways. But in the meantime, what we're doing is we're collecting like a 3 or 4% dividend. Okay, pretty cool, right? Okay, so eventually this is going to reverse, or at least I believe it's going to reverse, like gold has done, and that's when we'll be collecting much more than 4% dividends because we're locked in that cheaper price, right? And a lot of these oil companies, they're like dividend aristocrats. They just, every year, they just increase the dividend just a little bit more. So if you lock in your price down here at cheap prices, it'll get even more, the dividends will get even better every quarter as you go. Okay, XLE, that's this one, is down 2.8% for the week. So you guys got in your bet down here a couple weeks ago at 87.25. I think you're going to get a second chance. I think we might get back down here to the 200-day moving average. So I like a limit order at 87.25, then 84.50, and a stink bid down here at 81.50. All right, where are we? Natural gas is up 0.3% for the week. Kind of a double top. Okay, so zoom in here, and we can all see it. Kind of a double top right here. Okay, so it basically came to the same price point. So the high rate here for Henry Hub was 4.53. $4.69. And then over here, it was $4.67. We can effectively call that a double top, but we are getting a little negative divergence here. So what is negative divergence? Well, this little purple line down here is the RSI. And so we could see that when the price was up higher here, and we had an RSI of 76, then we get a lower RSI, but basically the same price, right? And yeah, I mean, it looks like it's forecasting that natural gas. So I think we're finally going to be moving down here in natural gas. Might come up for one more touch on Monday or Tuesday. I'd say the caveat here is we're kind of coming into the winter. And people generally use more natural gas in the winter because they like to stay warm and people don't enjoy freezing. And so we may just blow right past this. Maybe the fundamentals are going to take us up to newer highs here. We'll see. All right, our natural gas ETF is down 2% for the week. So still trying to break through this resistance. Almost did it on Thursday, got up there, and then just came right back down. Bouncing off all three moving averages right here. So that is a boatload. I repeat, a boatload of support. Maybe I should put another red line right here and underneath that one. That might be the thing to do. Probably. This is interesting. Okay, because see right here, it's looking to me like the price action and moving averages are saying this thing is going up. But down here, if I look at the RSI and I look at the MACD, you see how the RSI is below the yellow there? Blue line starting to turn down, probably about to go red. That would say that it's moving down. So, a lot of these are flipping the coin. I don't like to take a bet unless I'm at least 60%. And on this one, I'm 50-50, so I wouldn't really place a bet here. But set it and forget it. Limit orders, $22.75, $21.75, and your stink bid at $20.50. And next week, I've got Thanksgiving coming up. So as far as the markets, you're only going to have Monday, Tuesday, Wednesday to do any buys or sells or trading. And then on Thursday for Thanksgiving, the markets, USA markets, are going to be closed. And then on Friday, it's only a half day. So the markets are going to close at 1 p.m. New York time. So keep that in mind. But you will still have 4 episodes next week, 4 interviews. We got the last ones from the New Orleans Investment Conference. We're going to have Mike Maloney and Alan Hibbard of goldsilver.com. Got a very small silver miner. So I'm debating whether to put this one in the premium portfolio or not. I don't want to, very, very small market cap. He's only got 11 drill holes so far. So I'll tease it and leave it at that. That one's coming up. And then we have Dennis Blitz, where he's an expert on how to maximize, get the most out of your Roth IRAs, basically your American retirement account. So stay tuned for that. Those episodes are coming up. And thermocoal, basically flat for the week, kind of volatile, but basically closed flat. Probably lower next week would be my guess. And met coal is up 0.4% for the week. Looks like it's good to go higher next week. And our favorite coal ETF, because it's the only one that exists. Okay, now we're starting to get into some deals here. Okay, so looking like, so if you had your limit order at $22, that one hit, and next one coming in here is going to be at $20. If you really want to catch it, if you only want to get one bet in between these two, the green and the yellow, I would put it on the 200 moving average, which right now we'll call it at $19.50. Okay, so I like this fund a lot. And platinum is, coal ETF was down 6.1%. All right, platinum is down 2.6% for the week. So kind of, now it has quite a bit of support where it's at now. Okay, so platinum, basically kind of a cupish pattern almost here. I don't want to call it a cup and handle because, not really. But we do have a lot of support right here around the $1,500 level. It broke down below that, closed above it for the week, but you got the 50 and the 20 up above it to act as resistance. This one's kind of a tough call. I think we probably, I'm afraid, because I'm betting on platinum, I'm afraid that we have a little bit more weakness here because now we're down below the 50-day moving average, closed below it. We're flirting around this support line that I've been talking about forever. And usually this is kind of like a pin bouncing on a balloon and, like 5th time's a charm. So we'll see if we get a little bounce here. But I'm starting to think this is going to start to break down. All right. And Palladium, same kind of thing, similar pattern here. Although I like this pattern a lot better than the platinum chart. A little concerned. I was a lot more confident last week when I was only staring at this bar and we didn't have these next 5 days of information here. Okay, so that looked really positive right there. It looked even better on Tuesday, even better on Wednesday. On Wednesday, I'm like, uh-oh. Thursday, uh-oh. Friday, closed below the 50-day moving average. So, I'm starting to question this one right here. Looking pretty iffy. I'll be very curious to see what the price action does on Monday. My bet is it's probably going to go up, but this is the same kind of thing. We're just kind of bouncing on the balloon here, and usually the more times you hit it, especially when it's kind of angling down like this, I'm a little cautious. All right, and the Bloomberg is down 1.5% for the week, so still got a close above the 107.50 line. We closed 2 cents above it. So basically what's happened is over the last couple of years, the Bloomberg has not been able to break out above the that 107 line. We finally got it last week, and this week we came back down below it, pretty much bounced off the 50-day moving average there, and then closed slightly above it. So it looks to me like it's going to bounce and go above that support line next week. We shall see. Nickel absolutely dropping out of the sky. This is looking fantastic. Been waiting for this for a while. Down 2.6% for the week. So this is really good to see nickel finally getting washed out here. I think we're going to see a lot of our nickel equities get washed out. I think this, along with oil, may be forecasting a bit of a coming recession. And, Liberation Day sell-off here on nickel futures was 13,800. And we're sitting at 14,300 right now. So pretty washout sale. We'll see how this irons out. NIKL, the nickel miners ETF, brought to us by Sprott. Thank you, Sprott. Coming in for a nice little double bottom right there. You could buy on Friday if you want. You don't have to obey these lines exactly, which way? And it's kind of in a downtrend here. What did I write? First limit orders hit. Now we're approaching the yellow line. Yeah, I think we probably could get a little weakness here. Might get a little bounce here on Monday, Tuesday, just because of this double bottom. But I like a limit order here at 1275 and then 1150, trying to hit this 200-day moving average. Actually, I probably need to bring that up to like 1175. And REMX, the rare earths miners, hit right here. Got your first limit order in here if you didn't get one already at 67.50. Closed right around the 50 and the 20-day moving average. I'm just looking at this now and seeing a possible Fibonacci. Yeah, pretty much. So it hit right around the 618. I think it's good to go higher the first couple days of next week. And the PIC ETF, same thing, kind of hitting right on this first little red limit order buy line, just below the 50-day moving average. Got your first limit order in there for 44.50. I think this is going to start to sell off a little bit in the coming weeks. And I like limit orders at 41.50 and then a stink bid down at 38. And I should probably up that just a little bit, maybe 39. And Bitcoin, this is exciting, down 10.1% for the week. So we got the quick fall to 85 like we thought, so that was semi-expected. Now the next stop, I think, is going to be right here. It's going to be at 75,000, maybe a little bit north of that. And that's just a trend line going back for a while. But it looks like this is kind of in free fall mode, and I'm pretty excited. Although we are getting very low on the RSI. I got to point this out. So RSI is 23 on the daily, which is really low. The last time we were at levels like this, we were back here, and that was a short-term bump. I'm liking this. I think it's going to get washed out even just a little bit more with this tech stock stare. We've got the VIX, starting to run up. I think this is going to be good to wash out even more. And Bitcoin divided by gold. So last week you could trade 23 ounces of gold for 1 Bitcoin, and this week you can trade 20.8 ounces of gold for 1 Bitcoin. All right, well, thank you guys. I appreciate you guys being here. If you'd like to play a little more alpha, make sure you check out our premium service. Get a whole nother video just like this with company-specific charts, real-time updates of what I'm personally buying and selling. Remember, when you sign up, you are grandfathered in, and as long as you never interrupt your service, you'll be grandfathered in at that price. Thank you for being here. Go to stevebartonmoney.com for more, and have a wonderful day.